$1.2 million, plus $36,000 a year, grows to about $2.86 million in 10 years at an illustrated 7% return. The curve looks inevitable. It is not. A financial dashboard is useful only when it changes a decision. This lesson builds a 5-panel decision dashboard that separates your starting position, contribution engine, assumptions, friction, and life goal. The decision dashboard has 5 panels. Position shows where you are, contributions show what you control, assumptions show what you estimate, friction shows what can drag results. Goal shows why the model exists. Our synthetic household starts with $1.2 million in investable assets, $520,000 of home equity, $130,000 in cash, and $410,000 of liabilities. Net worth is $1.44 million. The position panel should preserve asset behavior. Cash, equities, bonds, property, private companies, receivables, debt, and depreciating assets need different inputs. A single total is the summary, not the model. The second panel is the contribution engine, and this is where the case becomes real. The household already creates $4,500 of monthly surplus and invests $3,000. Then take-home pay rises by $2,400 a month. A new car adds an $1,150 payment, plus $420 for insurance and fuel. Lifestyle spending rises another $800. Only $30 of the raise reaches the plan, so the annual investment contribution remains about $36,000. Contributions do not begin on an investment chart. They begin in cash flow. Here, income increased, but an auto loan, recurring running costs, and lifestyle creep absorbed nearly all of it. The dashboard should show the raise, the new debt, the car-related cash flow, and the unchanged contribution side by side. Otherwise, the compound curve quietly assumes money that never arrives. The third panel shows assumptions. At 5%, the illustrated 10-year value is about $2.41 million. At 7%, it is about $2.86 million. Same starting amount, same contributions, a $450,000 difference created by one assumption. This is the metric is lying moment. A smooth line hides volatility, taxes, fees, and the order of returns. Use a range, label it as an illustration, and update the inputs. Do not turn a clean chart into a promise. The fourth panel is friction. Reduce the illustrated net return from 7 to 6%, and the 10-year value falls by about $234,440. $8. That gap is roughly 6.5 years of $36,000 contributions. The named villain is hidden assumptions. Fees, taxes, inflation, idle cash, and missed contributions do not need dramatic predictions. They need visible rows. If the dashboard hides them, the compound curve becomes theater. The fifth panel is the life goal. This household wants a career break in year 4, a move to Lisbon in year 6, a $420,000 home purchase, and $120,000 for education. Wealth serves those decisions, not the other way around. Before modeling the future, the dashboard needs a trustworthy current state. The 7-ring panorama separates asset mix, custody, currency, net ratio, growth, income, and expenses. So one attractive curve cannot hide the structure feeding it. The real WealthMap home view is the current state layer. Net position, cash flow, debt maturity, runway, and the ring breakdown. It does not guarantee a 10-year return. It gives the scenario model cleaner inputs. When the result looks surprising, trace it back. Scroll to the underlying asset, liability, or cash flow row. Inspect the assumption, then return to the headline chart. A good dashboard lets you move from summary to evidence and back. No dashboard can choose your allocation, forecast markets, or know the emotional value of your life goal. It can expose the trade-off. The examples here are general education, not personalized investment advice. Your next action is to build 5 panels, lock the current position, measure the contribution engine, show assumption ranges, add friction, attach one life goal. Then change one input and see whether the decision changes. 1.2 million can become 2.86 million in an illustration. The useful insight is not the number. It is which assumption changes your decision. Which dashboard panel would expose the biggest blind spot in your plan? Start free at wealthmap.arcstella.com.